You are listening to a special preview of the KE Report Weekend Show with your hosts, Corey Fleck and Al Corlin. This preview is brought to you by our friends at goldeagle.com. To listen to the full 2-hour weekend show, please visit www.kereport.com on Saturday morning.
Hey, welcome back. I have to tell you, Corey's idea to add the Trader's Corner in segments 5 and 6 has really proved out to be a winner. We are chatting right now with Dana Lyons. Dana is a very interesting guy who also is a technician, works along with his father back in the Chicago area. We were chatting off mic prior to doing this interview, and Dana brought up the fact that he has been charting the price of gold vis-a-vis the XAU going back to 1990, which is quite a long period of time. And he feels that this week represents an incredibly critical point on that particular chart. And in his opinion, it could go either way at this moment in time. Describe your chart, first of all. And I want to tell listeners, by the way, that if you follow Corey's directions on the website, you can get that chart put up right in front of you on your computer.
Sure. Thanks for having me again, guys. Well, I think the first time that we spoke in late January, I mentioned the topic of the day at that point was the chart of the XAU, which is the Philly Gold and Silver Index, which is, as far as we know, the longest running gold stock index around. So what was interesting about that time was that since inception in, I think, 1983, the XAU actually a couple weeks prior to that had just broken its 2000 low and moved to an all-time low, which obviously for an index of that's been around that long, that's a pretty significant event. Well, at the time that we spoke in late January, the index had rallied back up and was testing that breakdown point around, I think it's around maybe at $42. And at that point, I posted a chart and put a blog post up stating that that the gold stocks were at a key juncture, likely in that it was either going to fail at that breakdown point and probably lead to another acceleration to the downside, a new leg down, or it was going to overcome that breakdown level and put in a false breakdown, which would lead to just as strong a move, but to the upside. So it took maybe another week or two before it became obvious that, it was indeed a false breakdown, and the rest is history, as they say, as the XAU is up over 100% since that juncture. So currently, as you pointed out, it's our belief that the XAU is probably hitting its biggest challenge since the start of the rally in January. It's hitting a couple pretty significant lines of potential resistance on the chart right now around, say, $85. So first of all, you have the former uptrend starting in 2000, connecting the lows in 2008 and also in about 2014. So it broke that line in 2014. It's coming back and hitting the underside of that right now for the first time. You also have the downtrend line from the tops in 2011 connecting the 2012 tops. It's hitting that downtrend line. So you have two major trend lines that are in play right at this juncture. In addition, we use Fibonacci analysis quite a bit. I'm not going to get into what that is exactly, but it's a mathematical sequence, and it plays out in charts a lot in the financial markets. The first major Fibonacci retracement level is right here. It's a 23.6 retracement of the complete decline from 2011 to the 2016 low. So it's hitting that first key retracement level right now, which also lines up with the 2013 through 2014 lows. If you look at the chart, there's a triple bottom in place there right at the same juncture around $85, at which it broke down in late 2014 from. So you have, at least four major lines of potential resistance lining up right here at this juncture around $85. Of course, it's either resistance or it could be an opportunity. at the moment, as I look at the XAU trading over $87 at the moment, we'll see how we close today on Thursday. It could provide a tremendous opportunity for longs if it's able to, successfully and decisively surmount this $85 level. Then you could get another leg up in this rally. But considering how far we've come and how fast since January, my guess is that it's going to serve as pretty staunch resistance, at least in the short term. So we'll see how we close today and tomorrow on the weekly close.
Dana, I think this chart is a great example of what the gold and silver sectors have gone through over the last 5 years, and then even going back to 2000 when this run really started to take form. And that is, these stocks and the metals in general have sold off so much from their highs back in 2011 that even with this nice move, when you consider where we were just in January, that there's still a lot of room to run up, but you are going to run against these resistance levels. And this one right around 82 does seem like a pretty large resistance point. I want to know from you, how would a breakout in your eyes take form? Would it have to break out strongly in one day or over a week and then hold above there? Or would it take a couple tries to get through this level?
Considering the significance of the level and how far we've run, as you mentioned, and how quickly, over 3 months now, the XAU specifically is up, close to 150% or whatever it is. So ideally, when you're running into a significant line of resistance like that, you want to see, maybe the rally take a pause a little bit, maybe pull back not too sharply, but consolidate those gains for a while. And we've seen, maybe about 10 days of consolidation right here or less, which, considering the magnitude of the line, is probably not ideal. I'd like to see it consolidate a little bit longer before attempting that breakout. Usually when you see something that's gone so far so fast and sliced right through a line of support or resistance, very often you see that kind of breakout or breakdown fail because you have so much momentum, so much money chasing that sector already, that and having chased that sector already, that a lot of the buying power at this point may have been spent, at least in the short term. So you see a failure of that type of breakout if you don't, pause to consolidate and kind of give that rally a breather before going on and attempting that next breakout. So ideally, I'd like to see things, calm down for more than 5-6 days over the next, say, weeks or a month or so before attempting, to move through that level. But, the market's going to do what's going to do. And above that level, I would say it's a bullish sign. If we close above it, we saw it in January. If we close above it and then turn right around in the next day or two and fail, then it's a failed breakout, and it's a pretty bearish sign, at least in the near term.
The consensus right now is that we may see a spike upward in the price of gold to the, let's say, $1,400 an ounce level. Real quickly, agree or disagree, and why?
The level that we've consolidated here for the last couple months is a pretty key level and a pretty not a surprising level. I mentioned earlier about the Fibonacci lines that we look at. We have two. We draw them from key junctures. One would be the 2011 high. The other would be the 2013 breakdown level. So we had a couple key retracements around the 1250-ish level. The next line would be up in the upper 1300s. So it depends if we can break these highs. Yeah, I would agree. Until that happens, we still have, a challenge here where we've been in this range. But yes, if we can break above, the recent highs, then the upper 1300 would be the next level I'm looking at.
Dana, it's great chatting with you. Thanks for bringing up this XAU chart. As you and Al mentioned, there will be a dedicated post to it coming out on Saturday, right around the time that this weekend show is released on our website. Dana, thanks again for your time. Everybody stick around. We're going to be right back.
Thanks, guys.